I think it's almost self-evident that there's something profoundly broken in the world of insurance. There's plenty of evidence, but as I say, it's almost self-evident. So there's a reservoir of ill will towards insurance companies. In the US, most Americans perceive insurance as a necessary evil rather than a social good, which is kind of shocking because it could be the ultimate social good. It's a community taking care of people in distress, but no, that's not the perception at all. 25% of Americans, when surveyed, say it's okay to defraud insurance companies. The other 75% were brought up better than to admit that kind of thing to strangers. So you've got an industry which has got, which is one of the most disliked sectors out there. So I think, as I say, the notion that there's something profoundly broken is almost not up for debate. The question becomes, what are the root causes? And that's really the key to how do you resolve them. And from our perspective, there are two structural issues in insurance today, and that's really why Lemonade is rebuilding itself as an insurance carrier, because we don't think that you can simply parachute down some kind of technological solution on an existing infrastructure when the problems are structural. And I'll try and touch on them briefly, but the first and the easiest one to chat through is the legacy. So in the US, almost 10% of the Fortune 500 is insurance companies, 40-something companies out of the 500. The average age is 95 years old. Nothing wrong with that, but what you're talking about is a corporate structure that is really the byproduct of the Industrial Revolution. So these are companies that were best practices, no doubt, at the time of their establishment, but those best practices are no longer true today in the era of the sharing economy and the internet. And it's incredibly difficult to reinvent yourself when the seas change. So State Farm has 18,000 brokers. What do you do? How do you reinvent yourself as a direct-to-consumer when you've got that kind of albatross around your neck? So I think the first one is simply the corporate structure, and it's the general, broad innovator's dilemma of how do you adjust behemoth, huge institutions with tens of thousands of employees. How do you adjust them when the winds change as dramatically as they have? So that's the first structural issue. The second one is, I think, more subtle and more insidious, and that is the business model. And this is really a big part of what we're trying to take a run at. So at the risk of being a little bit provocative, hyperbolic, or facetious, insurance makes money by denying claims. There is a profound conflict of interest at the very core of the insurance business model. So if I'm the insurance company and you're making a claim, every dollar that I pay you is a dollar less to my bottom line. Conflicts of interest don't get more entrenched than that. And I think that that is something that spirals. So I have a profound financial incentive not to pay you. You sense that, even if you don't understand the business model, which is why 25% of Americans say what they say, and you start embellishing your claim, which then justifies my treating you as a criminal and putting heavy-handed claims processes in place, which pisses you off and makes you behave even worse. And you get this spiral area of today where people don't like insurance, don't trust it, and most Americans say that they do not believe the insurance company will pay them when the day comes. So you end up with a situation where you've got corporate structures that have been around for 100 years and are very hard to change, genuinely hard to change when the winds change. And you've got a business model which has a conflict of interest at its very heart.